Hey, Carl, Bob, thanks for joining us today.
You.
We're here in your operations center. Look, your stock is down almost 10% when you miss on the top and the bottom line, and then you have guidance the way you do. What are you seeing in the economy right now?
Well, first I want to say a shout out. Our folks in the Network Ops Center, they do an awesome job running this airline every day despite weather. But so just got to say thank you to this team. But, demand was really tough. So we slipped about 6% from the beginning of the year, against what we thought. The nice thing is in the second quarter, demand stabilized on the domestic side. In the last month or so, we have seen the beginning of an inflection back. Again, it's just the macro uncertainty, I think, that drove that. But again, the good signs is we're seeing positivity now.
What happened with basic economy when you rolled that out? You even mentioned it in your earnings release that you saw a slip in terms of bookings and revenue.
Yeah, it was really the mechanics of this new product. So it has new restrictions, and the literal booking flow, you have a checkbox that you have to click. So it was really the friction in the process. So our folks went to work, and they attacked the digital flows, and that was all cleaned up in 2 weeks, and that impact was gone very quickly.
Given the weakness we're seeing in the broader macro economy, and even though you're seeing stabilization now, do you need to cut even more capacity in the second half?
We've been the leader in managing capacity here. We've taken another 1.5 points out of the back half of the year. This year will only grow about 1 point. But really the issue is getting the demand back. And we are beginning to see the demand strength come back to domestic and volume. And so I'm optimistic that we're seeing a return to travel here in the United States.
So you think from here on out, to a certain extent, even that basic economy traveler, the weakness has it's built in. From here, it stabilizes.
Well, after we made the changes on the basic economy, really the booking flows, we've seen stable demand. We've seen the conversion rates return to prior or actually a little bit above. So we're seeing a return of the volume and the bookings. Now, you are having to do more promotions than typical. You're rarely on sale in the summer, and really every carrier has been on sale this summer.
You are at the same time, as a company, buying back $2 billion worth of shares. Is this the right time to be doing that, given the challenges you're facing?
Well, we just completed the $2.5 billion buyback that was set forth in September of last year. We finished that $1.5 billion up in the second quarter. The Board of Directors approved an additional $2 billion share repurchase, but it's over 2 years. We have terrific initiatives in place, things like bag fees that came online. They're expected to generate $350 million in EBIT this year and a run rate of about $1 billion a year. So we think that the earnings power is going to inflect quickly, which is why we put a 2-year time frame on that $2 billion buyback.
How is assigned seating as you look at when you look at what starts in January? What's your sense in terms of how your customer is going to respond?
Well, what I love is that consumers want this. So more than 80% of our customers, 85% of customers that don't fly Southwest Airlines want assigned seating. They want extra legroom options. The great news is we've been able to pull that up, and actually it goes on sale next week, July the 29th. And I think we're going to do very well. And then it's for flights that operate in January of next year. But I'm excited that technology is done, and we're ready to start selling assigned seats.
But you're still cutting that guidance, though, for the full year, right?
Well, if you look at the full year, we set out a guide of $1.7 billion in EBIT, and the difference is just the macro. That $1 billion.
That's a lot of macro, though, Bob.
It is, but it's the same 5% that you've seen. Really, every other domestic carrier report, they've seen a 5% drop in demand, and that's that. Again, the good thing is that we've seen it inflect back, and what I love is that we've got a set of strategic initiatives that are unique to Southwest Airlines. So we have the opportunity to outperform. Those initiatives are on track. They're on track from a timing perspective. They're on track from a financial perspective. We're going to deliver, and you're going to see an inflection in the earnings power.
Bob, thank you very much. Bob Jordan,
thank you.
CEO of Southwest Airlines. Guys, we'll send it back to you.